Wow. Today, Tesla was up 7% at one point. Looked like it was going to be a huge day. Ended up closing the day only up 0.39%. Indeed, when I made the video earlier today, I had to do it a little bit earlier than normal because I had to take my son to his 2-year doctor's appointment. And honestly, I was shocked the whole time. Like just watching the stock after it hit that high of the day, just continuing to move lower. Now, there's a lot of nervousness heading into tomorrow, and that may be a bit of an understatement. Tomorrow is really going to reshape how Wall Street is viewing our markets and potentially viewing our economy, for better or for worse. That doesn't have to be a bad thing. It could be, or it could be really good. And here in this video, I will go over just that. We will look at Tesla stock, what happened today with the option activity with the short sellers, and ultimately why Tesla gave back that 7% move we had today. I mean, you were far above, relatively speaking, your 200-day moving average at the high of the day today. Instead, you closed at your support trend line. That was one of the biggest technical flips we've seen in quite a long time. So we have a lot to get into. The work is cut out for us here in this video. Hit the like button and subscribe to the channel to help push this information out to as many people as possible. Now, first things first, Tesla stock is moving higher today because Tesla is less impacted via tariffs. And the idea is that if Tesla does not have to raise prices like GM or Ford or some of their competitors would have to do, then Tesla would be in a much better position. Okay, think about it like this. If you have a Model 3, let's call it, that sells at $35,000. Let's say you have an Equinox, which is again what my mom drives, from GM, that sells at about $35,000. Where imagine a scenario wherein GM has to raise prices on the Equinox maybe to $41,000 or $42,000 or even $40,000. But Tesla doesn't need to do that. Maybe Tesla raises prices $1,000. Maybe the Model 3 goes for $36,000. There's a much better value proposition with the Model 3 versus that said Equinox, which could in and of itself help to boost sales for Tesla. It's like, another good way to think about this, it would be like having a name brand product selling for cheaper than a store brand product. Okay, in this scenario, GM, Ford, Stellantis are store brand products and Tesla's a name brand product, meaning in terms of value, what you get for your dollar. Okay, I don't think anyone's going to sit here and say that a GM, Ford, or Stellantis vehicle, the average vehicle that's comparable to like a Tesla, is better than a Tesla, right? You would say Tesla's better from a tech perspective, from a driving perspective, from a safety perspective. So hopefully you understand. Well, Donald Trump essentially said today that some auto parts may be excluded from that. And it sounded like as we went throughout the day, there was probably going to be some kind of concession, some kind of middle ground met. At least that's what Canada's prime minister kind of was referring to, that this is a ongoing negotiation. Now, GM was down about 7.5% today. So, yeah, they didn't really recover as much. The stock was down over 10% at one point today. So they recovered a little bit, but still, point taken. Tesla seems to be in a much better position than GM. Now, I think part of the reversal today as well in Tesla is this overall nervousness about what could be coming tomorrow and how tomorrow's economic data could really change things from, Wall Street's projections for the economy. Now, before we go ahead and get into the data coming out tomorrow, how this could impact Tesla, the big move that I'm expecting, we're going to look at option activity, short interest, and all of that. Before we get into that fun stuff, Fed Collins is giving an interview, or did give an interview today, and I want to read you some of the main headliners that came out. This one says economic uncertainty causes businesses to pull back, which is what we've seen already. She says it's too early to tell if data is turning weaker, and that's why tomorrow is going to be so important, because it's some of the first hard data that we're going to get on the consumer spending behaviors. She says the baseline outlook is a one-off tariff hit to inflation, but says that if tariffs keep coming, a different trajectory could come on prices. And she says that she expects the Fed will likely hold rates steady for longer given the outlook. Tomorrow is also a big day for Wall Street because it is the end of Q1. The last trading day of any quarter, you tend to have this quarter end rebalancing. Now, to some degree, that may, have been taken place in the last week or so, but it gets finalized in the last day. Now, again, the last day of Q1, which is tomorrow, happens to be on a day in which we're going to understand, are recession odds really climbing? Or was some of this growth concerns just fear that we were going to slow down, that it's not actually materializing? And we'll get into that in just one moment. But with Tesla down so much in Q1, down, at the low over 50%, there is a logical conclusion that we could make that if the data is not bad tomorrow, you could see a pretty aggressive rally in markets and an even larger rally in Tesla. And that's why I've been talking about this big move that is coming for Tesla. And we've seen that. Today, Tesla was up 7% at one point. We had a big move from the start of this week. You essentially went from the 250s all the way up to the 290s. But we didn't hold that today. We didn't hold 292, almost 293 today, which is a little disappointing for some people, to say the very least. But tomorrow does have the potential to give you an outsized move. You're talking 10-ish plus %, depending on how the data comes out. Now, option activity today for Tesla, despite the reversal from the high of the day today, was positive. 58% positive order value, 328 different trades, totaling $301 million from hedge funds and institutions today. The volume to the call side was 59%, volume to the put side of 41.2%. So there was definitely some bullish option activity today, to say the very least. Is this a definitive that tomorrow is going to be a good day? Not exactly, but option activity, can be a good leading indicator of what to expect next. Now, in the video earlier today, you had about 300,000 shares that were being covered on. To end the day, you have about 10,000 shares being sold short. So that kind of flipped. It's kind of a washout, net neutral, if you'll call it. What's interesting, though, in Tesla is you have recently seen the short interest spike about 0.5%. So you went from about 2.4% short interest to 2.91% short interest. You went from about 69 million shares sold short to 81.5 million shares sold short. You're still below 3%, so short interest is still relatively low in Tesla, historically pretty low. But you're back up to some of the higher levels. And if the data is good tomorrow, I would not rule out a fair bit of shorts covering as well, even to the extent of a short-term gamma event. That's kind of what it looked like happened today, but it wouldn't surprise me if that were to happen tomorrow as well, again, if we have good data. Now, keep in mind, we don't know what the volume or how the volume is going to translate into open interest until tomorrow. Were these just traders? Were these computers, algorithms, if you will? Or were these people that were actually buying these one-day options that bought and held them? Some of the volume today was absolutely redonkulous. You had 84,000 for volume at the 275 call, 86,000 for volume at the 277.50. That's ridiculous. Anytime you see volume that's that large on a middle strike, is kind of crazy, right? Between 275 and 280, you don't normally see a lot of volumes on those, weird strikes. You had 67,000 for volume at the 280, 250, but look at this, 218,000 for volume at the 280 call. 166,000 for volume at the 285 call, 67,000 for volume at the 287.50, 195,000 for volume at the 290, 85,000 for volume at the 295, 52,000 at the 192.50, 30,000 at the 297.50, and 270,000 for volume at the $300 call. Yeah, that is option activity like you have not seen in a very long time for Tesla. Very, very long time. And that helps explain some of the move up, again, 7% today. But I do think you're going to get a lot of that kind of activity as well tomorrow if the data comes in good. Now, you really want to get above that 286 level. And again, if the data shows the economy is not withering away into a recession, Tesla is easily going to blow through that level. Now, it depends how good or if it's, just good enough, or if it's really good, economy's doing great, then, that's going to definitely make a difference to what happens here for Tesla. I could see as high as 310 tomorrow if the data is good. That would effectively be like a 13% move higher for Tesla. Again, mix all of these factors together. Elevated short interest, probably because of recession fears, let's face it. Insane option activity. Tesla's clearly a smaller loser from the tariffs, which is part of the reason why the stock went higher today. It's down like 50% in Q1. There's a much stronger case to buy and hold Tesla here, especially heading into big catalysts later this year. We all know them, robotaxi, new vehicles launching, right? And tomorrow's the last day of Q1. So if things go right with the data, then you could see a huge day tomorrow for Tesla. So we're going to get into the data here in just a moment. I will mention that Lulu reported earnings currently down about 6% in after hours, pretty much guided down across the board. Not as bad as it could have been, but definitely not good at the same time. As far as the data coming out tomorrow, I've talked about this so many times here on the channel because even the Fed themselves, Jerome Powell said the soft data is shit. We all know this. Consumer surveys and expectations, all of it. Soft data is crap. The hard data is not. But what tends to happen is the soft data goes to crap first, and then the hard data catches up. For whatever reason, the Fed, the government, investors, they only put so much weight on soft data. I guess rightfully so, because if soft data can change, it's very sentiment driven. But the theory is that soft data happens before hard data, because if people feel bad about the economy, then they tend to spend less, but it takes longer to get picked up in that hard data. Okay, now tomorrow you have core PCE month over month. You're expecting 0.3%. Forecasts are as low as 0.2%, consensus around 0.3%. We calculate PCE from the inputs of PPI and CPI, so it's not going to be a huge shocker if this comes in line with expectations. If it's hotter or weaker, we're obviously going to react to that as well. Now, we are going to get personal income month over month. You're expecting 0.4%. That's not really a huge catalyst. There's some weird seasonal adjustments that happen in the first couple of months of a new year. People get raises, right, to start a new year, things like that. So I don't think that's as important, but personal spending is a bit of that hard data that will be very important, that is critical in assessing how the economy is doing. Now, personal spending, people spending money, is over 70% of GDP. If people slow down their spending habits, that is the biggest contributor to, positive or negative, in that case, GDP, right? Or, as you guys know, a recession is 2 declining quarters of GDP growth. usually coupled with a rise in unemployment. You've started to see that rise in unemployment, but recessions normally start as a confidence issue and a shock to the economy. You can make an argument that tariffs, a new trade war, and really just consumers that have been in a bad place for years now could all come together. Doge include them in this as well. Could be a shock to the economy. You've gotten a bit of that, soft data showing the confidence issues. Question is, does that translate into the hard data? Now, for January, you were negative, again, 0.2%. Expectations for February are 0.5%, and that's normal. Normally, when you get a negative month of consumer spending, which rarely happens, since COVID, there has been 3 negative months since COVID. 5 years. In 5 years, you have had 3 negative months. Let's just put that into like an actual percentage basis. There's been 75 months since COVID. Only 3 of them have been negative. So about 4% of the time, you'll get a negative personal spendings report. Okay? That's wild, right? It's kind of crazy to put that into context. That's kind of how rare a negative report is. And that's why you're getting this growth scare. That's why markets are in a correction. They didn't just V-shape recovery right back up. Do you know how rare it is to get 2 months back to back? Well, that has not happened since the COVID crash. In the last 10 years, I believe the only time you've gotten 2 negative months back to back is the COVID crash. You've got a couple negative months here and there, some 0% months, things like that. Yeah, it's ultra rare. Like, even just to get a negative month over the last 10 years, like, you can count them on less than 2 hands. September of 2015, there's 1. Here's another one. And then you have the 3 that we've had in the last 5 years. So out of the last 10 years, the last 120 months, you've only had 5 negative personal spending months. That is, again, about 4% of the time. It's rare, okay? And to get negative 2 months back to back, you've only seen that in the last 10 years with a recession. Okay, now question is it barely negative? Is it really negative? Or what? I lean towards it's going to be negative, but you never know. You never know with government data. You can have the best inputs possible and still get it wrong. That's what economists do all the time, and they get these things wrong, right? And they have the same data, they have the same inputs, but sometimes the numbers just don't work out right until they ultimately come out. So normally when you have a low month, like a negative month, you tend to have a really good next month. If we get that, then it's going to alleviate some of those fears of a recession. And that would be great. But if we get a negative month or negative data tomorrow, you open up the floodgates for recession fears. I mean, that's really the bottom line here. And that's why I've been talking about this personal spending data so much. Now, all indications we've gotten from consumer companies is the consumers pulling back. They're not spending as much money. Even, JP Morgan said that it started the first week of January and it didn't let up. Consumers just continue to slow down in all of Q1. And it doesn't seem like Wall Street is, I guess, expecting that. There's still not consensus for a recession. And I don't know if that should be the consensus. I think we'll have a better understanding coming tomorrow. But you're not really pricing in much of a recession fear. Whereas the Atlanta Fed GDP Now tracker is negative 1.8%. That's fine. A lot of people have dismissed this because of some of the gold imports. Well, the Atlanta Fed GDP Now tracker just added a new model to this to adjust for gold. When you adjust for gold imports, you're barely positive for Q1. You're up 0.2%. So, yeah, tomorrow, when we get personal spending, you could see the next GDP update is tomorrow. That will likely go negative again unless it is a really good number, even adjusting for gold or whatnot. So that's why it's going to be important. If it's a bad number, you're going to get a lot of people coming out that are bearish. And there's going to be pressure on markets. Like that's the fact here. And there would be pressure on Tesla. But if it's a good report, then you're going to alleviate a lot of those recession fears. A lot of them. Like imagine if we get like a 1% personal spending number tomorrow. Yeah, it's going to be hard to make an argument for a recession, at least in the very near term. Could that happen later this year? You know, potentially. But it would be hard to make an argument that we're currently in a recession, as some people have made. And obviously, I don't know the answer to that. But I do know from an equity perspective, from a markets perspective, you're going to move big tomorrow off of that. And unfortunately, I don't have the answers. I wish I did. If we take companies' words for it, which is where a lot of personal spending goes, is to corporations, then it's safe to say tomorrow is not going to be a pretty number. But then again, how the data is kind of collected could look a little, different versus what companies have said about a slowing consumer, things just continuing to get worse, or, obviously how the government collects the data could make things look a little bit better. So that's kind of what you have to keep in mind heading into tomorrow. And I do think with the setup that we have for Tesla, it's going to create a big move. 310 could be the level to the upside. Now, I want to be honest here. I think the upside is probably larger tomorrow, or the potential for upside is probably larger tomorrow than the downside potential. Because I think if we get a bad number, you're probably going to fall about 6% down to about that 257 level or so, that 20-day moving average. If things were really bad, you're going to fall about 8%, maybe 9%, down to about this 250 level. But I think there is a lot of support levels here to the downside before we get back into this range. You really have this trend line here that we're at about 270. Then you have your 20-day moving average around 257. And then you have this downtrending trend line here, which goes all the way back to your previous high that you set in July of 2023. That's at about 250. And then if you get below that, then you set up, then you're back in the range between 250 and 215. So I actually think the upside potential could be larger than the downside potential. But you could see a literal 10% move up or down coming tomorrow. That's how big tomorrow will be for Tesla and really for our market. Let me know what you guys think about this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.